Hello everyone. In this video, we'll be covering the last topic of our subsidiary books, that is journal proper, also called as general journal. You can also say in this book, we record all those journal entries which are not recorded in any of the subsidiary books. Now, a book to record transactions that are not recorded in any other subsidiary book, that book is called as journal proper. Format is as same as the journal. There are no changes in the format. Just few entries what we have to learn is opening entry whenever we are starting the business are as sundry assets account debit. Two liabilities, we all know assets are debited, liabilities are credited, and capital is also credited. This is the first entry. After that, the closing entry what we pass to close any particular account. What are the accounts you have to close, that we are learning here. So closing purchases account. See, we all know when we purchase any goods, what do we write? We write purchase account debit to cash. But when we are closing that account, what will we do? We will do to purchases account, we will close that. So trading account debit to purchases. Same case in the sales, what we used to write? Cash account debit to sales. But when we have to close the sales account, we will do the debit to the sales account. Like this, when there are expenses, what do we do? Trading account debit to direct expenses. If the expenses are indirect in nature, then we will do profit and loss account debit to indirect expenses. It is not direct, it is indirect expenses. Direct and indirect expenses has already been taught in the basics of accountancy. You can go and check in that video. Now, moving further, the first capsule we have here is journalize the following. Land and building, plant, machinery, fixed asset. First, remember, we have to classify what is asset, what is liability. So, we'll begin with the land and building. Land is asset. Plant and machinery is also asset. Furniture also asset. Stock is asset. Debtor is also asset. Sundry creditors is our liability. Bills payable is also liability. And bank loan is also liability. So now when we have to pass the journal entry, what do we write? Land and building. Plant and machinery account debit. 4,50,000, not 4,50,000, wait, 4 lakh and 4,50,000. 4 lakh, 4,50,000. Then furniture and fixtures debit 1,50,000. Then stock and sundry debtors 350 and 300. Stock 3,50,000. Then sundry debtors 3 lakhs. Sundry creditors is liability, so we'll write 2 sundry creditors account 2,50,000 in the credit side because it is our liability. 2 bills payable to bank loan, 2 bills payable to bank loan. How much? 1 lakh and 3 lakh. Now understand one thing. Liabilities are credited and assets are debited. As soon as I write this, no, a student says, sir, but debit side and credit side total is different. It is not matching. But we know that it should always match. We learnt in our opening entry. What was the entry? Asset account debit, 2 sundry liabilities, 2 capital. So whatever is remaining, that we will put in the capital account. 2 capital account. What is the given name? They have not given the name. If suppose there is any game, Ram or Sham, you will write 2 Rams capital. Now here will come the balancing figure. We will do the total of this. 3 lakh plus 2, 5, 6 lakh 50,000, 6 lakh 50,000. And this total is 4, 8, 9, 10, 11, 12, 13, 14, 15, 16 lakh 50,000. 16 lakh 50,000. So here will be coming 10 lakhs. This is your capital account. Here you will be writing the narration being capital introduced. Now, the next entry we have here is Mohan Singh was declared insolvent and a sum of 15,000 could not be received. It means it has become my bad debt. If it has become my bad debt, we have also learnt these journal entries when we were doing the series 2. Here again we have to write Mohan Singh is not giving me any money. So you can say, see, Mohan Singh was my debtor. He was supposed to pay me 15,000. Suppose he pays me 15,000. What entry will we write? We would have written here cash account debit to Mohan, account 15,000 and 15,000. But the problem is they are saying that he has become insolvent and he is not giving me any money. Sum of 15,000 could not be received. If sum of 15,000 could not be received, then you cannot write cash here. It has become your bad debt. So what will we write? We will write bad debt. Bad debt account debit to Mohan 15,000, 15,000. Moving further, an old machine was sold to Manish for rupees 5,000. Now, if machine is sold, that will come in journal proper. So we will write machine has gone, so we have sold it to Manish. Manish account debit to machine account 5,000, 5,000. Because machine has gone, machine was our asset reducing, that's why we are crediting it. Because machine was our asset and because we are selling it, that's why we are crediting the machine account. Now the next part, goods withdrawn from business for personal use. This will also come here only. So we will write, if goods are withdrawn, what will we write? We have learnt all this in purchases videos. Drawings account debit to purchases account. We have withdrawn for the personal use, so drawings debit to purchase how much? 3,000. 3,000 and 3,000. After this, goods withdrawn is done. Purchased furniture from Raj Furniture for shop rupees 10,000. We have purchased for rupees 10,000. Remember, cash we have not paid. It is not mentioned that we have paid the cash. What will we write? We have purchased furniture from Raj. So we will write furniture account debit to Raj Furniture rupees 10,000 and rupees 10,000. We have to write narration for each and everything. Please do not forget it. Goods of 20,000 lost by fire on 25th April. We are passing this. See, it is just you can say it is the revision of the entries what we have already learned in the series 2. But we have to remember that these all entries will come in journal proper book. There we wrote simple journal entries in journal book itself. It is journal proper. Journal proper you can say, as I have already said it, if any entries are there which are not coming in any subsidiary books, everything will come in this book. You can see here, see, bad debt is also coming here, sale of machine is coming here, drawings also coming here, goods lost by fire also is coming here. So we have to write it here, goods of 20,000 lost by fire. So we will write loss due to fire account debit to purchases. We have lost the goods, so we know that it is to purchases account. Now what is the next entry? Insurance company accepted a fire insurance claim of 15,000, okay, and check was received on 27th April. So on 25th April there was fire, then 27th April we got money. If they have accepted the claim, it means first we would have filed the claim. If we would have filed the claim, see, this happened on 25th April. Now I can say on 27th April what would have happened? I would have filed the claim. Insurance company debit to loss which happened to due to fire. How much money would I want from insurance company? See, I would want entire 20,000 rupees only. Simple, because when I am filing the claim, why would I suffer any loss? I will say, okay, 20,000 goods due to fire I have lost. Please give me the 20,000. After checking all the documents, insurance company says, no, we cannot give you 20,000. We will give you only and only 15,000 rupees for your claim. Okay, I lost goods worth 20,000, but now I am receiving back 15,000. It means my net loss is only 5,000. So again writing there, I have received money. I will say check received, check in hand. How much check I have received for? 15,000. It means I have a loss. Whenever there is a loss, profit and loss account debit 5,000 to insurance company. 20,000. I had to receive 20,000 from insurance company. They are giving me only 15,000. Therefore, my loss will be 5,000 rupees. Understand this? See, if you can see here, my net loss is 5,000 rupees only. See how it is functioning. First, there was the loss of 20,000 debited. Then again we credited that account. Why? Because we said that I will receive the loss from insurance company. Okay, so loss account closed. Then I told insurance company, please give me 20,000. So I debited insurance company. Insurance company said, I will not give you 20, I will give you only 15. So I closed insurance account also. So finally, what is the entry? I have received the check of 15,000. It means I have lost only of 5,000 and I have lost the worth of goods 20,000 rupees goods from my godown, because those are burnt. That is burnt. But I received 15,000 rupees as check and 5,000 rupees loss, we transferred it to profit and loss account. That's all for the series of subsidiary books. Thank you so much.